Hello, everyone, and welcome to the Startup Operators Weekly Roundup. My name is Gunjan Saha and Roshan, the host of the Startup Operator podcast, and I will take you from the greatest news from the previous week on the startup ecosystem. Now, we're already done with 6 months of 2021, and the months have been just whizzing by, right? And you won't believe it, but we've already crossed $10 billion of worth of funding in 2021 already, right? And considering the pace we are seeing in the space with the likes of Tiger Global, I think most probably before the year ends, it will have more than doubled, right? And we have a lot of interesting news to share this week for you guys. But Roshan, what anything interesting from the week you noticed?
Yeah, more than a few things that were interesting. Good afternoon, everyone. Hope you're all doing well and taking care of yourselves. So I think there was quite a lot of chatter about the talent crunch and stuff, right? I think that's a very important thing, and I think more than a few tweets that I saw, right, alluding to the same thing. I remember Ashish Dave putting out something of that sort, right? I mean, founders are not just fighting for funding and whatnot, but they're also fighting for talent, right? And look, it just comes down to competing harder for talent, right? And I've said this before that you have to sort of showcase your work in a way that people really want to do that kind of stuff, right? And you have to be inspiring. You have to treat your job description forms and whatnot as landing pages, literally, right? And really monitor the funnel, right? Because it's just going to get harder. There's a lot of money out there. There's a lot of interesting startups out there. So how will you corner the best of the best talent, right? And long term, you will definitely have to develop some of this talent in house. It's, I think, gone are the days when you can just cherry pick who you want from the market and then fit them into your organization, right? So that is long gone. In fact, I mean, I was talking to a friend of mine, Pradeep, yesterday, and he was telling me how they've hired more than 100 people over the last year, right? And a lot of this talent is put through the grind in terms of proper training, onboarding, coaching, and stuff like that, right? And that's also another reason why people join startups, right? Because startups typically what people do is they just throw them at the deep end and make hope that they will figure things out for themselves, right? It's a very sink or swim approach, but I don't think that is going to work, right? I think we need to formalize a lot of onboarding training processes and make sure that the people actually join you, because I mean you will upgrade their skills and whatnot. So for sure, do check out the episode we did with Murli Vivekanandan of Ideas to IT, right? He spoke a fair bit about this. And from the candidate perspective, right, it might seem like you'll get a higher you'll get a raise or you'll get a higher salary every 6 months or 7 months. But guys, I mean, don't price yourself out of the market. I'm telling you, there's no value in thinking short term, right? And this is just from my experience of having been through this for about 13 years or so, right? Market peaks at certain times. Play the long game, right? Find a team that's worth working for. Find an idea that's worth working on, right? And commit to the long term. When I say long term, at least a 3 or 4 or 5 year journey, right, at these places, because the amount of learning that you have will just compound, right? Rather than building half an app in one place and three-fourth of an app in another place and not seeing the full cycle of problems that you'll have, right? Seriously. So don't don't play this game of like shifting startups every 7 months or 8 months or 1 year, right? Stick around in a place, learn from that place, and cause real impact, man. I mean, that's really what you guys are here for, right? I mean, obviously you're smart, and
Exactly.
obviously you'll earn plenty of money in your career. And a career is 30-40 years worth of work, right? I mean, it's, of course, you'll have a second and a third chapter and everything, but don't play the 1 year game, really, right? That's my only advice, I would say. But yeah, plenty of other positive news also happening. I mean, I was pleasantly surprised that Manipur has not been connected to the railway network even until late, right? And last week
Wow.
we heard that it was finally connected to the railway network, right? So pretty big deal. And of course, I mean, we have the Zomato IPO coming up this week as well. We've spoken plenty about Zomato, and contrasting opinions in terms of one side saying that order value has gone up significantly. I think it's gone up from some 260 rupees to around 400 rupees, and the other side saying that they're still making significant losses. And yeah, I mean, interesting times ahead for sure. It's going to be a good week ahead as well.
Right. And also to the point you made about, playing the long game. I mean, the folks who had been since the early days of Zomato, Grow, Urban Company, right? I mean, playing the long game will surely paying out dividends, right? In terms of these
Yeah,
companies
it's
going
not just
public.
it's not just the monetary aspect of things, right? See, what you have to realize is that you will have to tell a story, right? I was person X at Zomato who did Y in the time frame of, let's say, 3 years or something of that sort, right? The more compelling that story, the better your chances of, like, finding that next gig which could be more meaningful, right? Rather than saying that, yeah, I was there for about 7-8 months and did some interesting work, right? I mean, what the hell kind of story is that, right? So not just from a skills and learning perspective and a maturity perspective, but even from a storytelling perspective also, right? You really have to have it in the long term, because the really difficult problems take time to get solved, right? I mean, that's just reality, irrespective of where you're working.
Right. So, yeah, I think, over the past rounders, we have been seeing how check sizes are only growing larger and larger in size, right? And last week we saw a $500 million fundraise by Ola, right, and by the parent company called ANI Technologies. So recently they announced that Temasek and Plumwood Investment Limited, which is an affiliate of Warburg Pincus, along with Ola's founder Bhavish Agarwal, they invested $500 million in the company, right? And this comes right ahead of its IPO, right? And I think they're aiming a size of 93.75 billion rupees. Now, the pandemic has been tough on the company, right? Being a rideshare platform which did not need the lockdown imposed to at all, right? Almost 95% of their business had come to an entire screeching halt, right? And not only that, 35% of their workforce were also laid off. But the post recovery has been really strong, and there is a increasingly shift in preference from public transportation, right? And companies like Ola is perfectly positioned to capitalize on the mobility needs of the customers. Now, although the IPO date has not been announced, but massive work has been going on, right, across the verticals of Ola. But I want to see know from your perspective, what do you think is the future going to be for a company like Ola?
So, by some estimates, I think 70% of the demand is back on ride sharing itself, right? So, I was looking at a few numbers, and apparently there were 78 million rides clocked in March, right? And that was 69% of what was recorded in the pre-pandemic month, right? So, see, Ola is a very fundamental disruption, right? It's going to stay. I mean, we're not going to go back to the times of booking taxis and cabs by calling people off the directory, right? We're never going to go back to that point. And last mile transport in India is a huge challenge. Public infrastructure, public transportation is yet to catch up. So the business as such, right, is fundamentally solid. I mean, it's going to be around for forever. I mean, the genie is out of the bottle. There's no going back, right? And soon as demand is back, I mean, you will see them back to doing the kind of business that they were doing, right? And I think with the round itself, they're probably getting a 30-35% discount on the valuation that was there in 2019, right? So, which is
Right.
I think they were valued at about $5 or $6 billion at that time, if I remember correctly. So, which is also the reason why, I mean, a lot of these investors have tried to get more stake, and it's very inspiring to see that Bhavish himself has put in a lot of money. It reinforces a further commitment to the vision, right? And look, Ola is I mean, it's a fantastic company, man. I mean, if you think about it, it was founded almost right out of college, I would say, right?
Right.
And the way it's matured over the last 8-10 years has been fantastic. We've spoken about Ola Electric. Again, it's going to be another fundamental disruption. So yeah, I mean, very, very interesting times ahead for Ola, right? So let's see. By the way, did you catch the pre-launch campaign that Bhavesh did for Ola Electric?
Yeah. Yeah, right. No, and it's very similar to how Zomato is also doing their, Food July campaign, right? Leaking
Yeah.
emails. It's pretty cool and quirky ways of marketing.
Yeah, very interesting marketing campaigns, I should say.
So talk about interesting, right? Another really interesting piece of news we have for early stage startups. Chiratae Sonic aims to accelerate and democratize the fundraising process for founders and ensure that they have easy access to capital. Right? What they recently announced is that they'll offer a 48-hour turnaround on seed fund requests and pitches for investments that are less than or equal to $500,000. Now, this has never happened in the Indian ecosystem, and it's the first of its kind. So we have been speaking to a lot of VC investors, right, in the podcast, and we are seeing that capital is getting highly commoditized. And the only differentiator between fund houses is the network and the expertise that they're able to offer, right? But if you look at Chirate's portfolio, they have companies like Bizongo, CureFit, FirstCry, Bounce, Nestaway. Even Flipkart was one of their portfolio companies. But as we try to accelerate this early stage investments and seed funding, how do you see this move impact the Indian ecosystem in the long run?
Yeah, I think Play Simple was also one of their portfolio companies, if I'm not mistaken, right? Play Simple got a huge exit. Just I think last week we covered that
Last week, yeah.
350, $400 million, I think, and they had raised just about, I think, only one round, right? $4 million that they had raised. So look, I think Chirate has formalized something that people were already kind of getting in tune with, right? Because if you look at the guys who were writing the Series A checks or just the pre-Series A checks, man, they have been sweating, right? Because the game has changed clearly, right? I mean, you have Tiger Global, which is writing Series A checks right now. You have the likes of Sequoia, which is running the Surge accelerator, right? And you've seen the kind of work that Axel is doing. So the game has completely changed, right? I mean, a lot of people are cornering this. The talent and the cap table very early on in the journey itself, right? So a lot of the big guys. So at the early stage, I don't think people really have a choice in the matter, really, right? I think if you look at Tiger, I mean, they're probably doing one deal a day, right? That's the run rate. And at the crazy check sizes that they're writing, right? Tens of millions of dollars. So gone are the days when you can take weeks, if not months, for due diligence and things to that effect, right? I mean, you follow any VC on Twitter, that's what they're talking about. There's a lot of optionality for founders, for good founders, I would say, right? And money has become commoditized at the early stages for sure, right? So these are things that early stage investors will have to do to really stay relevant. I've recommended this article called "Play Different Games" by Everett Randall of the Founders Fund, right? A very nicely written article, and it talks about how Tiger just flipped the game, right? And how the others have to play that game now, right? There's no going back, and yeah. Chirate is one of the oldest, I would say, homegrown Indian VCs, right? And they have some pretty interesting bunch of startups that they're working with as well. You mentioned a few of them, so yeah, it should be interesting for sure. Good
Yeah,
for
and it's
founders, I would say.
yeah, absolutely. And it's not only VCs that, being the competition in the early stage space, right? Recently, Flipkart
Yeah, yeah,
announced
for sure.
their own accelerator program, Flipkart Leap. And I think just a couple of days back, they announced their first cohort as well. And they're targeting
No,
retail
and
tech, robotics, agri-tech, and so on.
yeah, yeah, and you're going to have a lot of these super angels, these one-man VC fund types, right? Micro VCs, all of these guys, right, coming in, because I mean, there's going to be, because of all of these ESOP buybacks and whatnot that have happened, right? We saw Farm EC announce an ESOP buyback. We saw Zerodha announce an ESOP buyback, etc. There's a lot of cash that's going to come into the operator types as well, right? The VP, CXO folks at some of these companies, and they're going to put a significant chunk into startups as well. So the whole 500k check size, 1 million k check size is going to get fairly competitive, right? So these are things that venture funds at the early stage will have to do anyway, right? So Chirate has just formalized that. Yeah.
Right. So over the past few rounders, we have been talking about how smartphone penetration has been increasing in India, right? And it's not only in India; we're seeing similar trends towards Southeast Asia. And riding this trend has been Pine Labs. right? They recently closed a $600 million fundraising round with some of the world's largest investors, right? They include a Fidelity Management and Research Company and BlackRock. And I think very soon they'll be targeting an IPO in the US markets, right? With this fundraise, the valuation has gone up to $3 billion. And very recently, I learned how the business model works. So banks and merchants, right? They pay a monthly fees for using Pinelabs software, and they also receive a micro fee on every transaction, right? So considering that, like I said, considering the trend of smartphone penetration, right? Everyone, even the smallest of small merchants, want to go digital and compete with the likes of the brands in Amazon or Alibaba, where the payment process are very seamless, right? So how do you see this story panning out?
By the way, do you know when Pine Labs was founded?
I think it was quite some time back though, 2008 or something.
No, man, that's what you'll be surprised to know. They were founded in 1998, right?
Oh wow.
So it's a 23-year-old company. And of course, I mean, they've pivoted a couple of times, right? I mean, they started off, I think, in the petroleum retail automation sort of a space. And then I think in 2004 or something, they entered payments and services, right? I mean, financing services and so on and so forth. So yeah, look, payments is such a fundamental disruption, right? I mean, it's the tip of the sphere, is the front end for every particular industry, whether it's retail or automobiles or whatever it is, right? I mean, it's such a fundamental thing, right? And if you look at how payment penetration itself has grown over the last 10 years, especially in India, right? I mean, due to Aadhaar, due to UPI, due to demonetization and whatever, right? Phenomenal kind of growth, right, into this whole cashless economy that we're living in. And the other need, the more fundamental need that they're solving for some of these merchants is that, look, I mean, my customers come in and go out. I have no idea whether they'll come back. I have no idea who they are. I have no idea what I need to do to get them back, right? Now, there's zero relationship in for all of these, like whether it's kirana stores or whether it's like all these small outlets and whatnot, right? And that is a very fundamental problem that Pine Labs is solving. This is a problem that people would talk about 10 years back. They're still talking about that right now, right? And if you look at Pine Labs itself, I think they offer a variety of services aside from just payment transactions, right? So
They offer
they
credit
have
services as well right now.
Correct. So they offer credit and financing. They have working capital loans. They have loyalty as well. Loyalty, I think they acquired this company called Quicksilver some time back, right?
Right.
And they have loyalty as well. So it's not just payments. They have like bunch of services associated with it, right? And people call it India's Square, right? And Square, of course, has 100 billion plus market cap. But I would kind of say that Pine Labs has a greater potential. If you look at the market dynamics of India and some of the Southeast Asian countries, right, it's very similar, right? And Pine Labs has sort of expanded into these regions, right? Whether it's Malaysia or even Middle East, for example. I think Dubai as well. They're there. Their payments terminal has an integration with more than 24 banks, right? And which is again a non-trivial thing, right? I mean, it creates so much more frictionless experience for the merchants itself. They don't really have to move to a different bank or whatever. And these integrations are not trivial. I mean, so they've been able to strike these partnerships with a wide variety of banks, and also supplement it with the technology integrations as well, right? So yeah, this is I mean, it's a fantastic business, and it's a mammoth size of a business, right? I mean, payments is fundamental to everything. And if you're going to be cross industry, then the world is your oyster, right? I mean, that really is it. But also, I mean, a word of praise and admiration to the executive team. I think Amrish Rao, who's the CEO, joined the company in about 2020. He's a veteran, right? So he's been with PayU and Citrus before, entrepreneur and executive types. And we talk a lot about the 0 to 1 journey on the podcast, right? The 1 billion plus journey is no less daunting. In fact, I mean, I think it would be even more challenging in some respects, right? So fantastic team, fantastic opportunity, and I mean, very, very interesting times ahead for sure.
And also got me thinking, right? I mean, almost 2 decades of existence, right? And today it is the name it is.
Yeah.
But if you look at payments as a space itself, it's a very cutthroat competition, right? I mean, if
Yeah.
you think of a new company entering the space already crowded, and there's not much innovation that you can bring about in the space, right?
No,
Because the
there's a
payment
lot of
rate,
innovation. It's just no, no. There's a lot of innovation. It's just on the outside of it, right? See, the payment aspect of it, the transaction itself, enabling the transaction itself is just the tip of the spear, right? It's what you do around it, right, and how you can be relevant is a greater challenge, and that's what everyone is trying to do, right? Whether it's Pinelabs or Razorpay or Instamojo or whoever else, right? I mean, everyone is trying to enable all of those things. But payments itself, right? I mean, I'm telling you, it's not such a. I mean, it might seem like a lot of people are trying to solve the same thing, and of course, transaction fees are, is a dog fight, and it's going down to zero, whatever. But that itself is a very very hard problem to solve technically, right? I mean, even with all of the developments that we've had, I mean, yeah, we take it for granted because it works, right? But yeah, it's quite tough. And also think about the risk, man. I mean, payment fails, I mean, it's the consumer is going to be pissed with you, the merchant is going to be pissed with you, and think of the scale as well. They're processing perhaps tens of billions of transactions, right?
right?
So
And
yeah,
imagine your server goes down just for a couple of seconds, the amount of losses your
yeah, you're screwed.
customers will have. So, okay, you've made a point about staying relevant for customers, right? And I think Tiger Global is almost staying relevant for us every roundup. Recently, they led a $144 million investment for Dealshare at a post-money valuation of 455 million. Westbridge Capital, Alpha Wave Incubation, and Z3 Partners also took part in this round. Now, Dealshare has a really unique position in the social commerce space, right? It's a discovery-led social sharing, group buying, and a gamified shopping experience. And these three things are really relevant when the entire country was in a lockdown. And just within 2 years, Dealshare has serviced over 3 million consumers and over $20 million. Their target by the end of the year is to hit a GMV run rate of 1 billion, and so of course not trivial. So, what do you make of the whole social commerce scene in India?
It's very, very interesting, man. I think we spoke about this earlier when they raised a round, and we compared. I think we also spoke about Misho, which raised about 300 million, right? So this whole group buying phenomena is has existed for a while, right? And all of this is a trend away from the Amazon sort of e-commerce that we're Amazon or Flipkart kind of e-commerce that all of us are familiar with, right? So this trend will only accelerate, and Dealshare is focused on tier 2 cities and towns, and they have very essential items like sugar or oil or toothbrush type of stuff, right? And they're discounting at a significant number, right? I mean, 20-30% kind of discounts.
Right.
And yeah, I mean, apparently their order value is something like 1,200 rupees, right? Which is pretty significant if you ask me, right? We spoke about Zomato's order value being around 400 right now, and that's increased from 260. So yeah, a lot of margins to play with, I would say, right, on that front. Social commerce itself, right? I mean, you have Misho, which is trying to enable these micro entrepreneurs to sell their products, and then you have Dealshare, which is group buying and discount buying as such. Then you have the likes of OLX and Quicker, which is like buy and sell used goods sort of a thing. Then you have the Instagram and the Facebook type of like D2C phenomena that we're seeing. Then you have a lot of all these WhatsApp commerce sort of innovation that's happening, right? So there's a whole world outside of the Amazon and Flipkarts that we usually talk about. And given the size of India's market, domestic market, right? And all of this is only going to increase, and all of this is going to only get more interesting in the time to come. So yeah, super stuff.
All right. So next we have Spiny, which is a pre-owned cars platform. Recently, there is $103.3 million in a new funding round, and this too was led by Tiger Global. But it's very interesting to note that just a couple of months back in April, they had closed a Series C fundraise. And with this, the 6-year-old company has raised over $220 million from the likes of General Catalyst, Think Investments, the Fundamentum Partnership, Axel Partners, and Elevation Capital. So what Spiny does is, right, it eliminates all layers of intermediaries and dealers to provide the the right price for your car. And we covered the funding of Cars 24, right, which had entered the Unicorn Club last year. Investors are really seeing a lot of potential in this used car space, right? I mean, Yuri Milner's DST Global and other investors are also planning to invest $250 million in Cars 24 at a valuation of 2 billion, right? So what do you think will be the key takeaways from here in the coming months?
By the way, I'll give you another trivia, right? So Cars 24, Car Deco, and Spinning, all of them are based in the same area. They're all based in Gurugram, right?
Wow.
So yeah,
Why
there's
do you
that.
think that is though?
No idea. I think they're, I don't know. I guess generally, I mean, they're better at buying and selling cars in Gurugram, right? So that was interesting, I thought, right? So yeah, so Spinny says they are more buyer focused than seller focused, right? And I see their service as kind of a true value plus this whole online marketplace sort of a model. True value is of course Maruti's what is that used car purchase vehicle, right? I mean, basically brand, basically. So Spinny says it sources its cars from dealers, individual suppliers, and even some of these platforms like CarDeco and whatnot, right? Reconditions them and then facilitates the sale, right? The average selling price of a car on Spinny, they say, is around 4 to 5 lakhs, which is double that of the rivals. Yeah, so it's again, it's a very big space, I would say, right? We saw that I mean demand has suppressed quite a few, right? I mean by quite a bit, I mean in the pandemic as well, as such. Not a lot of people are buying cars as such, but once demand returns, I think these are businesses that's going to take off anyway. They're doing some healthy revenues, but this valuation is again crazy, right? 30 times the revenue is what I heard, right? But maybe, I mean, they're considering the gross merchandise value, right? The GMV, and doing some kind of valuation on that. Who knows, right? So,
Mhm.
but basically, look, a 4 to 5 lakh sort of a transaction means that it opens it up to all kinds of things you can do on the margin, right? I mean, you can, for instance, I mean, I think they can very easily tie up with a few other service providers. They can tie up with insurance companies to start offering insurance. They can do post sale service, the accessories, etc., etc. I mean, there's a
Becomes a
ton
full
of
stack
things.
company.
Yeah, exactly. See, if someone's spending 4 or 5 lakhs, right, they won't mind spending another 20 or 30K for some of the other stuff, right? So which is where the whole margin is as well when you're facilitating that. So you can very easily add to your margins by giving those 2 or 3 other services that I mentioned, right? So interesting stuff. And I
Right.
had no
Well,
clue they existed. I mean, that's what I was I was saying before we started. Also, the number of startups that are raising 100 million rounds that I had no idea about that even existed is just amazing. Every week I discover something new.
I couldn't agree more. But personally, what I'm looking for? Looking for companies like Tesla and all to, set up the base in India, and the car subscription model starts, wherein like every month you can, just subscribe to a car and the end of the month return it and get a brand new car. So yeah,
Mm.
definitely exciting times ahead. All right. So let's see what Vambozar had tweeted recently. In his latest tweet, he said, I tend to get starting trouble or writer's block when I try to get any project started. One way I overcome this is to throw out the idea of perfection and start doing something very basic or mundane. Basic is better than nothing. Nothing offers nothing to improve upon. Have you had any experiences where you actually felt this or like you actually
Yeah, I
experienced
mean,
it
I
firsthand?
see this. I see this every day. Done is better than perfect. So yeah, ship something out very, very. It always happens when I'm writing stuff, right? So the first version of anything that I write, I really hate. But then I just put it on paper so that I have something to work on top of. Rather than, because nothing is more daunting than a blank page, and I think that holds for anything that you do. I think having something to build upon is always better than having nothing. So whatever endeavor that you are undertaking, I mean, just take baby steps, and build upon it. Basically, keep moving.
Right. So hopefully this will be the mantra for the week ahead.
Yep.
Uh, all right. So we are almost at the end of the roundup. So Roshan, you're going to have a conversation with Adit Poddar, who is the founding partner at Gemba Capital, right?
Yeah.
And you'll also be talking to Sanket Shah, who is the founder and CEO of InVideo. So what are these conversations going to be based around?
So I've spoken to both Adit and Sanket a while back. We'll be publishing these episodes this week, and both of these conversations were really memorable, I would say. We've spoken a lot about early stage financing and how that's being disrupted, right? So Adit and I spoke about this whole, super angel, micro VC sort of phenomena that's happening. Adit has invested in some really interesting companies like Plum, which we had Abhishek and Saurabh on the podcast some time back. Invested in Airmeet and a bunch of others, right? And he spoke about what is the reality of financing at the early stage. How should founders look at some of the stuff that's happening, and made a lot of sense on industry trends itself. Fascinating episode, 1 hour conversation, very very insightful. And Sanket is Sanket has been a founder for 10 years now. So he started various ventures, right? I think he started 2 or 3 ventures, and so he has a very mature outlook to everything, whether it's building product or looking at product market fit and so on and so forth. InVideo is a very interesting product. I mean, they're building a tool that makes it very simple for people to create videos, right? And some of the stuff they're doing on browsers, which is unimaginable stuff, right? So we have a producer Thiru on the call, right? And Thiru will tell you how difficult it is and how much memory it consumes, how much RAM it consumes to edit these
Right.
videos. And to be able to do this on the browser is again a very very difficult thing technically. And they're creating this tool, which is again B2C SaaS, which I'm really excited about, right? So wonderful episode on a bunch of things related to building creator tools. So do check out both these episodes. Fantastic insights in there for you guys.
All right. So with that, I think we have come to the close of this week's roundup. Thanks, Roshan, for taking us through the news from the previous week, and a huge shout out to all our listeners for always chiming in with their thoughts and sharing their honest feedback with us, which is helping us improve. As Roshan mentioned, do check out our episodes on your favorite podcast platform. And yeah, we always love hearing from you on how you like the episodes, what we can do better. Hit us up on LinkedIn or Twitter. And until then, we'll see you again next week, same time.